How you doing? I'm Shawn Eckles. I am a real estate agent, and today I'm here with Harold Lawson. Today we do want to talk to first-time home buyers and give them some information on what it takes to actually get into a home. So, Harold, from your standpoint, can you give the people some information on how to get started?
Well, first thing that comes with first-time home buyers is they assume some things that I just want to detail to talk about. It's never a right time to get in a home. It's always a great time to see what your options are. So if you have a desire to be a homeowner, start that process right away is what I would say to start off. Now, uh, let's talk about the steps. So there's always a component that begins with you getting money, right? The money you need to purchase that home before you go out with someone like Shawn as a real estate agent to buy homes. So in our business, we call it an approval process, right? There are two types that you'll hear as a first time home buyer. You hear pre-qualification and you'll hear pre-approval. They are not interchangeable, and a lot of times first time buyers assume they are. From a pre-qualification standpoint, especially in this market, it is hard. It's a challenge to get into a home. Reason is because of pre-qualification, and we don't do them at the mortgage firm, but a pre-qualification is the most basic vanilla understanding of an idea of what you might be able to afford. Usually comes when you have a relationship with like a credit union, you hold some assets with them, or you purchase a car through them or something. So they have a history with you. So they'll give you a general idea based off some basic items like your income, maybe a soft pull on your credit, and give you a pre-qualification. But what happens is when you take that to the market with a real estate agent like Shawn, is you get to the back of the line when it comes to submitting offers. Yeah, and that definitely is a challenge in the competitive market. Now, the more important one is what we call a pre-approval. Uh, and it's just because of the strength of it. You have levels, you have the cash buyer. Cash is always king. We've seen that over the last few years with these investors coming in. But you as a buyer, you can be more competitive with a pre-approval. And what this is, your financial fingerprint. Uh, this is an opportunity for us to collect income, your income information, your credit information, your liabilities, your cash on hand, your employment history, your rental or rental history information, and then we verify that with the supporting documentation. And once that's verified, we do what is called a pre-underwriting process, and then we issue a pre-approval that states on there for whoever you're submitting, the seller that you're submitting the offer to. It states that this person has been vetted, hard credit has been pulled, all the information, the W-2s, 1099s or K-1s, their bank statements, their retirement statements, their whole life cash value policy statements, tax returns, all that's been collected to show that this buyer is not only just a viable buyer, but a strong buyer.
You kind of touched on it briefly, but what documents do you need to start this process?
Well, first off, we need a loan application. And it's loan application, we need a history that I call it 2 years and a day. So you go back 2 years and a day of your history of who you've been employed with. If you've had multiple employers, that's okay. As long as you haven't had a lengthy break in service. And sometimes you can even explain that with a letter backing it up. So you go back 2 years and a day of employment, 2 years and a day of your living history, your rental history. Sometimes when you've rented, if you have a conversation with your landlord, they can submit to the credit bureaus that you paid well. A lot of times buyers, especially first-time buyers, don't know that they should reach out to their landlord or property manager and ask them to submit their payment history to the credit bureaus. That gives them some strength in their credit if they paid well. So you need your W-2, 1099 or K-1, depends on if you're self-employed, contract worker or, a regular employee, you need your statements, bank statements. We usually collect at least 60 days of the current bank statements. The reason we do that, we want to see that there's no improprieties in the flow of your funds going into your account. Now, some of that information we have to collect is outside of the lender's hands. It's more of the government trying to avoid money laundering issues or concerns before we issue a mortgage. And then you need your retirement statement, 401k, a whole life. I say a whole life insurance policy because a lot of times they have a cash value that can be liquidated if need be. And then you need your tax returns, your most recent tax returns. A lot of people now, they haven't filed their 2021, but you need to have that filed and collect that prior to us getting to the true underwriting stage. And obviously your lender will let you know that. One thing that people are not thinking about up front, especially first-time buyers, is a gift. We can accept a gift for down payment closing costs from a blood relative. And one of those documents that we would collect will be a letter stating that that person is truly giving you a gift and not a loan. So those are some of the standard documentation, Shawn.
All right, and I know we have different types of loans, and with each type of loan, you have different qualifications and things that people have to adhere to. Can you just talk about a couple different loans so people can get an idea of each type of loan and what they offer?
Okay, what's generally done out there in purchasing, and it's obviously different types of more loans that I'm going to talk about, but I want to talk about the most basic ones that get a first-time buyer into a home. You have a conventional loan. Conventional loan, the biggest thing about conventional loan, if you put enough down payment down, you won't have what's called mortgage insurance to back up your loan. But mortgage insurance is basically money that won't go toward your principal, won't go toward the purchase of the home, but you need it to kind of back up your mortgage. But in conventional loans, a lot of times you put that 20% down, that goes away. Then with a conventional loan, it's less paperwork and stipulations required for a conventional loan. And probably the most important thing with conventional loans, you can use this for more property types when it comes to land or a manufactured home or those type of things. You can use, without restrictions, you can use those conventional loans. Then you have an example that's going on a lot in this market, construction to permanent. And this is saying, hey, we're going to help you build a home as long as you're purchasing the land with it. So that's usually a 12-month process. You have to get a builder, your builder approved through your lender before those funds could issue. When you start paying through those 12 months, but usually it's principal interest only at the prevailing interest rate. So that's construction to perm, getting you a house with raw land, and 12 months later, you have keys in your hand of a house that was built. Then you have your government loans, your FHA, your VA, your USDA. All of these have different guidelines that we don't have enough time to go into here. But the most important thing about those loans are they're government regulated, and they have a lot of stipulations that the conventional loans do not. So you just want to know where you fit into those stipulations, whether it be your credit rating or the type of home you buy, or even the how old the roof is on that home. Sometimes you can't get issued these government loans, and your lender and someone like Shawn will definitely see if you fit in those boxes. The only challenge with those type of loans in this market is they're being put behind, say, that cash buyer, then that second in line, that conventional buyer. Then you have those government loans that don't really make you as competitive as they would, say, 3, 4, or 5 years ago. And then you have, once you get in the home, doesn't really apply to first-time home buyers, but once you get in the home and you have a lot of equity, then you have your your refinance or renovation loans as well.
All right. So once we are pre-approved and we got our pre-qualifications into everything out the way, and we start looking at homes, when we reach back out to you, how does that go?
Well, what happens is you get the pre-approval, right? You want to have your lender talk to once before you submit offers. You want to have you and your agent get together with the lender, and you have your lender talk to the listing side or the seller side to let them know how strong of a borrower you are or buyer you are for that offer. Then once the offer is accepted, all signatures are done, that contract comes back to the lender, and then the real process starts, meaning we have to do this, what's called, in the simplest terms, for lack of a better term, smell test, meaning, okay, you got a pre-approval. Now we go to our processing process where we evaluate all the documentation we've already received from you. Now we may need to update that documentation because it may be the most current. We may need to pull your credit again because we want to make sure you didn't buy a Lamborghini during the process of finding a home. You didn't open any huge lines of credit, get an American Express black card or something to that effect that changed your situation during that pre-approval process, your situation did not change. And then it's going to go to the underwriting process. So that's usually I would say from the day you execute the contract, all signatures are signed, you turn in the contract, we lock the rate at the prevailing rate of what it is at that time. So your rate is locked. And then we go through that underwriting process. You usually about 20 days, give or take 3 or 4 days, to know when we get what is called a clear to close. And that's the magic term that your agent wants to hear, the listing agent on the other side wants to hear, and you want to hear that you probably have not heard before me saying it, but a clear to close, meaning that we've crossed all the T's, dotted all the I's, collected all the information, collected blood from you probably, and now we're ready to go get to the closing table, get your signatures, get the listing agent signatures, have the money exchanged, meaning the mortgage money exchanged, issue the mortgage, and get that smile on your face when you have those keys in your hands at that time.
Yeah, and this is something that comes up quite often with me as a real estate agent. And the client normally comes to me whenever they get the closing statement and they see something called a loan origination fee. Like, where is that coming from and what is it?
Well, there's so many hands in the process. The lender has to get compensated. So when we originate a loan, there's just a cost of doing business. So through that process, your lender obtains lender origination fees. Is any fee like you would pay to go to do anything, any service that's provided, because as you can hear, all that I've talked about is a long process. Most of the time, especially in this market with people having the challenges of purchasing a home, it's been 4 to 6 month process from the first day you talk to a lender to the last day you got the keys in your hands. And that's the origination process, right? You have your loan originator, you have your processor, you have your setup staff, you have your underwriting staff, and then you have the final people the lending dollars come from that give you the money. So all of that creates what's called the closing costs or the loan origination fees. That's what you'll see on your what we call a loan summary statement, and it's all disclosed. It's not like going to buy a used car where some of the information is covered up. No, by law, we have to be very detailed. Within $100, if we're off within $100 of what we tell you that it's going to cost you, then we could be held liable for the cost of that mortgage.
So we found a home that we want to get in. We submitted the contract and the contract was accepted and we're about to go to the closing table. What interaction do you have with the client once they get to the closing table and beyond?
Well, once we get to the closing table, usually we have someone representing the mortgage firm. If it's not me as the originator, someone representing. If they're not able to be there, what happens is we try to call you as the borrower afterwards to tell you, hey, things may happen during the process. You're going to get a lot of information about your mortgage. You might even get a letter saying your mortgage was sold to another lender that someone thought your investors out there that say, wow, this is a good loan. We want to purchase that loan and be held. We want to hold those assets, hold that relationship so that we can collect that interest rate for over the next 30 years. So we just have you look out for any documentation, anything you don't understand. We want you to ask us, reach out to us and ask the questions, and just not assume. And we have a whole department that handles, and that's a part of, you don't get paid, you don't pay any more for it. We have a whole department a service department that services your loan after the closing, after you have keys in your hand, so we don't go away. And you get a cutting board for your new house with your last name on it from us once you close your loan. So you'll always remember the mortgage firm and Harold Lawson, who helped you get into that beautiful home.
And this is the big question right here. When do you start paying your loan back?
Usually at 45 days after you close. So you have a window where you don't have your first payment. So the standard usually is the 45 days after you've left the closing table, you pay your first mortgage payment. Back in the day, they call it a mortgage coupon.
Okay, so is there something that you feel like a first-time home buyer needs to know that we might have overlooked or just jumped over today?
No, I think, wow, we covered a lot. One thing I do want to say to first-time buyers in the initial stage, when I talked about don't just assume when is the right time. Try to work on it. If your dream and you want to own a home, you want to get your information in the hands of the right people, lender, real estate agent like Shawn, to start that process. So what can happen? Maybe you won't get in the home right away. You have 6 months left on your lease, but there's things in lease and leases, depending on what your lease says, that can, if you're in the process of buying a home and you make the landlord aware that you can get out of your lease, what they call break your lease, sometimes without even paying any extra compensation to the landlord. But you just want to know all the details of what situation you're currently in, and then how to get to where you ultimately want to go, and that's home ownership.
And if somebody wanted to work with you, how would they be able to do that?
All you have to do is Google Harold, Harold, Lawson, Lawson, and mortgages in Florida. You'll find me. I also cover Georgia. So the mortgage, I work with the mortgage firm. You'll have all my information there. My website will pop up. Google is a powerful thing. You just put in Harold Lawson, the mortgage firm, or even Harold Lawson Mortgages, and I'll come up at the top. You'll see my face, the same face on my website, on my LinkedIn, and just reach out. Even if you just have questions, you might not need me as a lender, but if you have any questions about lending or mortgages, or we talked about your lease, I'm not an attorney. I can't tell you the legalese of the lease, but at least I can point you in the right direction of who to talk to. And then obviously, if you need to buy a house in Georgia, North Carolina, my man Shawn will definitely put you in the right home.
And one thing I do want to say before we go is, whenever people start looking for a home, the more prepared you are when you start, it normally makes the process go a lot easier, and A video like this is helpful because it lets you know the documents that you need, and it gives you an idea of the process before we get there. So if you take anything from this video, be prepared. Be prepared for the journey that you are about to go into.
Absolutely, Shawn.